How's it going, everyone? It's Sam. Today I want to talk to you about the new crypto bill and some interesting information that was included in it. This is the one coming from Senator Loomis, and some interesting information included in it that might change how you want to invest moving forward. Because there's some interesting parts of it that could make it really, really attractive to invest in a certain way that we haven't had in the past. So if you don't mind hitting the like button and subscribe button, I appreciate that. We're also going to cover some of the other top news in the market from the stock market and the crypto market, but we're going to keep that brief here at the beginning. So thank you for hitting the like button and subscribe button. I do want to say too that we've seen a lot of different companies that are now scaling back and they're not hiring as much, but FTX just announced that they're going to continue to push forward and continue to grow. And they said that since they exponentially scaled their revenue and productivity and not their expenses, they're going to be able to continue to hire and not freeze that and not lay off people either. There's a link to FTX underneath the video too. I'm a partner of theirs and they have some of the best apps out there. So they allow you to trade really cheaply. They allow you to buy a lot of different cryptos with a really user-friendly interface, and they're trusted by over 6 million people here in the US. Definitely check out the links underneath the video to their app where you get free crypto on trades over $10. Now, the cryptocurrency market is looking pretty good right now. Since yesterday, we actually did a pretty big dip. I talked about this last night, how there could be a crash because today we were supposed to get some legislation from some Bitcoin maximalists, and a lot of people thought, myself included, that it might be quite negative towards altcoins because this was coming from a lot of people that were really focused on only Bitcoin and possibly saw the rest of the altcoin market as kind of a liability. And now that's come out, which is what we're going to cover here in a bit. And last night, when I said that there could be some kind of big dip for a lot of these altcoins, right after that happened, there was a massive dip, like within hours of me posting that video. Now it has returned because some of the language in the bill is not too bearish for altcoins. Now, we also saw a little bit of a dip this morning because of the fact that Target pretty much tanked the entire stock market. They said that they are cutting what they expected to make for this quarter right after they cut it a few weeks ago and gave pretty bad guidance. Now, they're also saying that they have increased inventory, even though they're trying to make a lot of different items on sale. So this pushed the stock market down in the pre-market, but everything's kind of recovered throughout the day. Don't forget too, we do have CPI data coming out on Friday, so be on the lookout for that. Now, just as a little reminder before we go into the bill, why we like Bitcoin so much. First of all, if you earn money, the government inflates it away. If you store gold, people find more gold. We don't really know how much gold there is. If you buy stocks and the price of the stock goes up too much, a lot of the time the company will sell more shares because they want to lock in that higher valuation by actually raising some funds. You save cash, they print and debase your money. So that's why we buy Bitcoin. We know exactly how much there will be at any time in the future, and this can't be changed. Now, a couple of things that I think we need to pay attention to right now is we do have a good amount of Bitcoin coming off exchanges. We had about 30,000 Bitcoin drained off just overnight. And then one other thing is too, we have a lot of leverage in the market right now. We're near a 0.3 leverage ratio. So we might be geared up for something pretty quick move here in the future. And you can see that we have pretty much just traded sideways for a long time in this range. So we might see some pretty big liquidations in the future. And we've seen pretty heavy liquidations a couple times over the last couple months as well, because a lot of people are going on that higher leverage because we're just trading sideways. Now, the big news of today was that massive bill. And let's take a look into it. So I'm going to use the paraphrased version, and I created some highlights here so that we can just go through the important stuff. So this is coined the Responsible Financial Innovation Act. It seeks to encourage responsible innovation by integrating digital assets into existing laws and providing greater clarity to an industry that is largely unregulated and lacks common standards and defining measures. It's 69 pages. Now, we're going to cover some of the highlights. It's pretty meaty. It's pretty jargony as well. So I'm still rereading this and trying to really form an opinion. I have some opinions already, but I'm trying to take a look at it again and just run through it, make sure that this all makes sense to me, because like I said, it does take a while to get through even the shorter version because it is kind of long. Now, with that in mind, know that this isn't necessarily what's going to happen going forward. This is 69 pages. They'll probably chop it up and review it in smaller parts so that they can pass some of it through at least. So what they say is the SEC will regulate digital assets classified as securities, whereas the CFTC will be in charge of overseeing those that receive the commodity stamp. So no currencies here. It's either securities or commodities according to this bill. Now, in order to be classified as a security, the digital asset must provide the holder with a debt or equity interest in the business entity, liquidation rights, or entitlement to interest or dividend payments from a business entity, profit or revenue share in a business entity derived solely from the entrepreneurial or managerial efforts of others, or any other financial interest in the entity. Digital assets that are not fully decentralized and which benefit from entrepreneurial and managerial efforts that determine the value of the assets but are not debt or equity or don't create rights to profits or other financial interests in a business entity are not classified as securities as long as disclosures are filed with the SEC twice a year. So, a couple things there. They are a little bit more liberal, or a little bit, I should say, they're a little bit more cautious about defining altcoins as securities compared to what I thought. I thought they would pretty much just say, hey, if it's not Bitcoin or not Ethereum, it's going to be a security, but that's not necessarily what they're saying. There are a couple things that they require. First of all, you need to be able to profit or revenue share in a business. You have liquidation rights, or you have debt or equity in a business. And this, I think, is just to prevent some people from literally just being like, hey, I own this rental property, I'm going to tokenize this, and then you get profits from it. So it's a little bit cautious because that would be a security in that way, but it still is more lenient on some of these altcoins than I thought it would be originally. They say exchanges will need to register with the CFTC to conduct trading activities and will need to abide by rules in the areas of custody, customer protection, prevention of market manipulation, and information sharing. The CFTC will be allowed to charge a small fee on digital asset exchanges to cover increased costs to the agency. So you can see up here, you're going to have to give disclosures to the SEC so that you're not a security. Down here, you're also going to have to abide by the CFTC rules and make sure that you show that there's customer protection, prevention from market manipulation, information sharing, all that kind of stuff. So you're going to have to pay some fees, right? If you want to work in this space, if you're wanting to build in this space, you're going to have to pay some fees as projects and exchanges. Now, it doesn't really affect us too much. I think people have to realize if something is labeled as a security, it doesn't really hurt the people that are investing in it too much. It just makes it so that other people have to jump through a little bit more hoops, and it's just going to make it a little bit more difficult for them, which isn't necessarily a bad thing for us, right? I mean, it's not that hard to start investing on a trading app, right, for stocks. So it's not like it's going to be that much more difficult for us here in the US to invest in cryptos. It's really on these other projects and the exchanges. The assignment of the CFTC to oversee spot markets could help pave the way for a Bitcoin spot ETF. This is really what I think people need to realize is this article or this bill is really to help adoption, right? And that's to provide, that's going to happen through providing regulation and security. So people know what they're investing in. They know that they're not going to get slaps on the wrist in the future after this is made, assuming they follow these rules. And the key is to not stifle innovation, not to slow down innovation. Now, some of that will happen just because there's going to be more hoops that you have to jump through, like we talked about. But overall, so far, it looks like this is doing quite well, right? We're talking about giving access to an exchange ETF or a spot ETF in the US, which would give a lot more people the ability to adopt a Bitcoin in retirement accounts, in trading accounts, things like that, would lock up a lot more crypto, also provide security and regulation as well, just to make large institutions a little bit more likely to invest as well. They say that the agencies are expected to develop rules for such cybersecurity standards. I think this would be good as well if there was some kind of standard for security, so that way we don't have massive hacks happen as often, even if it takes away from some projects that are so proud of their security by leveling the playing field. I think that's better overall. They also say they want to have a study on the power consumption of digital assets. I like what they say though here. They're not just trying to move away from proof of work like some countries do, talking about proof of work bans. They're just talking about moving through to more renewable energy sources and clean energy, which most of Bitcoin mining is already clean, but I think that just makes sense. I mean, that's one of the major things that people are cautious about crypto for, just because they hear information about it ruining the earth and causing so much waste. I think a lot of people don't really understand that it's not that significant compared to a lot of other industries, but I think that just providing the study will help with that. They also say the legislation will provide a tax exemption for capital gains that don't surpass $200 on a Bitcoin payment for goods and services. Now, they say that you can't kind of game the system and make a ton of small payments or a ton of payments for $199. It will be treated as a single transaction. But this is really interesting because we don't see this with other assets that we really like to invest money into. And I think a lot of us still think of Bitcoin as an investment as opposed to diversification away from the dollar. Some people just think about it as another kind of currency. But this is interesting because if you bought now, right, you buy at 30,000 and then it goes up to 300,000, well, you 10x your purchasing power. And with all these little items, right, you wouldn't have to pay tax. Imagine having a 10x gain and just being able to use that tax-free. That would be awesome. Even if it is for smaller items, you could kind of game it out, and then every time you go out to dinner or every time you buy clothes or anytime you have any kind of small payments, someone comes to your house and fixes your faucet, you just pay with Bitcoin. And then you don't have to pay tax. That would be a great use of Bitcoin, I think, over time, and would, I think, help people transition to using it more often. Because right now, I don't really have a benefit from using it. I don't want to use it because of the fact that that I think it'll be worth more in the future. But once it is worth more in the future, and I still think it's going to be worth more moving forward from there compared to the US dollar, I might say, hey, even though I think it's going to be worth more in the future, the fact is I don't have to pay taxes on it. So I might be more willing to use it. They also say that bill goes one step further to declare the miners that miners are not seen to be brokers and digital assets obtained from mining activities are not to be treated as income until they are converted into fiat currency. This would also be interesting. And I'm not a tax advisor, but I do have a miner myself. And how I understand it is you can take a tax deduction when you get the miner. You basically can write it off over a number of years. And you are taxed then when you get the cryptocurrency, when you mine it. Now, I could be wrong on that, but based on what they're saying here is you could mine it. You could take that tax deduction up front, right? Or over a few years when you get the miner. You could mine for 5 years and then hold on to it for 20, 30, 40 years and not be taxed ever on it until you convert it into fiat. But what if you never convert it? What if you just use it for some of these different items? So you're getting a tax deduction when you mine it, you don't have to pay taxes, and then when you spend it, you don't have to pay taxes. So that would be amazing. I mean, that's better than some of the retirement accounts we have here. So if that part passes, you might consider getting a miner because of the fact that you're not paying taxes on it based on this wording. So just something to pay attention to. That's going to be quite interesting and would make me quite excited. I think there would be a push to buy a bunch of miners because you could get that tax deduction and then hold on to the miners, hold on to the Bitcoin for a long time in the future. And they are quite profitable. Even at today's levels, I'm still going to make my investment back in a few years, and they last for 5 or 6 years. Now, they also say the 401k section, Loomis Gilbrand requires the Government Accountability Agency, or GAO, to analyze the opportunities and risks associated with investing in digital assets with retirement accounts. I think this is, again, just to have them kind of look at the risks and opportunities, so that way there's some kind of body of work that they can look at and reference and be like, hey, it should be allowed to be invested in Fidelity and in Charles Schwab and in your 401ks, Roth IRAs, and all these different places. So that way it just provides more information on the subject by the US government, and that way they can kind of push to get that approved and people can start investing. I think that would be quite beneficial because it kind of just puts the ball in their court, makes them do the work, and then hopefully from there it can just get approved and we can start investing in a lot more places. There was some pushback recently too when Fidelity said that they're going to allow it in 401k accounts, and the question was how much should they be able to invest in there, and then some people were pushing back saying that a lot of people won't realize the risks of this, and I think this again just would provide more clarity. It also grants the right to a person to keep and control the digital assets that they own. I think this is really important too, just because so many people that hold Bitcoin want to continue to have that legal ability to hold crypto and hold Bitcoin specifically, and they want to think of it as property, something that you can own. They also say it also provides provisions on stablecoins, such as requiring issuers to hold US dollars or dollar equivalents to enable redeeming by the customer at any given time. I think this is good too after the UST debacle, and with USDT and a lot of people not really trusting them. I think this is great because a lot of people really do want to have that US dollar back up the cryptocurrency or the stablecoin just for extra security. I think that would be really beneficial and would make a lot more people trust stablecoin, use it more willingly, and could be interesting for some kind of yield generating opportunities because more people trust it, right? There'll be more people borrowing it, more people lending it as well. This, I think, provides a good amount of information. Just this shortened article, the longer one, 69 pages. But the fact is, it is wordy, so I'm still working through it as well. I would highly suggest you look into it, watch more videos on it, go read it. I think there are a lot of different parts that are included, and it will probably have to be broken down. You have to remember that a lot of the people that are going to approve this don't really know much about cryptocurrency. So it's going to take them a while to understand it. It's going to be a lot of people maybe working for them, trying to help them position themselves either for or against it. And there's going to be a lot of talk and debate on this. So right now, I think it's just a lot to digest. Over time, though, hopefully they start to approve parts of it. And I think this will be bullish for cryptocurrency overall and just bring more adoption. Really, that is what we want. We want adoption and security without stifling innovation. That's all we want, especially from the US government. So let me know your thoughts on this underneath the video. Hopefully this kind of gave you an idea of the bill. Again, I think it wasn't as bearish towards altcoins or as bad for altcoins as I thought it would be. I think that they didn't just flat out say that they can all burn down. I think that's something that they had said in the past, that if all the altcoins burn, Bitcoin will come out of it like a phoenix or something like that. It was something like that. So I think overall it was pretty positive overall for the cryptocurrency industry. But again, we don't know what's going to come out of this. Let me know your thoughts on this underneath the video. Check out the link to FTX underneath the video too. They're still growing like crazy, and there's a reason for that, because they offer great products and a great service. So check out those links, and I'll see you in the next one. Bye.